Okay, for question 6, they ask you to work out the first and second provisional tax payment. Now, the fact that it's 15 marks means, and the fact that they've given you a table means you will have to apply the basic amount and potentially increase it with inflation. Now, because they tell you clearly state on which date the payment must be made, you also need to indicate when the payment dates are. So when will the 6 months be? You actually get a mark for it. So let's quickly look at the information. They tell you you are registered as a small business corporation, which means we have to apply the SBC tax tables. Okay. Then they give you further information. So let's quickly see if we're busy with the 2020 tax year and our year end is 31 May. Our tax period would have run from 1 April 2019, 1 June 2019 up to 31 May 2020. Okay, so that is our tax period. I want you to write your tax period down when you do a question like this, because this will just help you figure out what of this information in this table is the one I'm going to use. So remember, for your first provisional tax payment, we have to use at least the basic amount. But now we have to assess what is the basic amount. Do we need to increase it to get to adjust the basic amount? Now, our first provisional tax payment, so let's just write here, the first provisional tax payment is 6 months of the year end. So that means if we start at June, it's June, July, August, September, October, November. So our first one would be at 30 November 2019, and our second provisional payment would be at the 31st of May at year end. Okay, now if we start with the first provisional tax payment, we know it's 30 November. Okay, we have not done the 2020 assessment. It has not been assessed. The 2019 one, we have not submitted it at the date we have to do it, at 30 November. So we cannot use the 2019 one. The 2018 one was assessed on the 26th of November. So that is 4 days before we have to do our first provisional payment. So the rule is it needs to be older than 14 days prior to the payment date. So that means we can't use the 2018 one either. So we actually have to use the 2017 return for our basic amount. But that is older than 18 months, which means I need to go increase it by 8% for every full year. So that would mean 2 tax years have already passed. So I will increase it with 8% for 2 years to get to the adjusted value, and then go work out the first provisional tax payment. For the second one, we have to look at what is our estimated taxable income. Is it more than $1 million, less than $1 million? Now, if we look at the estimated amount, we have 1.9 million, which is more than $1 million, which means we have to apply 80% of the actuals, or it needs to be more than that. Because we don't have actuals, we have to use the estimated value at that stage to do the calculation. Okay, and because the estimated is based on current data, we would not have to increase it. Okay, so let's go. And the last thing you need to see is the 2017 assessment had a taxable capital gain of 52,000. Now, why do they give that to you? When you do your basic amount calculation, we remove capital gains because of the fact that it might not happen every year to work out the basic value. Okay, so I'm going to stop sharing this and then share the Excel so that we can see how are you supposed to do the calculation. Okay, so the first thing you have to state for the first provisional tax payment when the payment will happen. So you get a mark for stating that the first payment is 30 November. You don't have to write it that long-winded. If you just wrote that the first payment would be 30 November, you would have gotten the marks. Okay? So that is the first thing. This is an easy mark just by applying the rules. Okay, so it's not difficult. Then the next things you have to state is we will not use the 2019 assessment because it has not been received at the date we have to do it. That's the easy thing to state. The 2018 one you state is not older than 14 days before payment date, so we cannot use it. Also easy mark. So now we will have to use the 2017 one for our basic amount. Okay. Now, they give you a mark for saying it's older than 18 months. You don't have to do the 2 steps, but just state there then the period, the year of assessment period, and then you can state there for me it's older than 12 and 18 months, and therefore we will have to inflate it by 8%. Okay. So the first thing we start off with is our basic amount per the table, which was the 1.845 million, okay, for 2017. So you bring that out of the table. Then we deduct the capital gain for that year, the information that they've given to us, because the capital gains might not happen every year. Then after you've removed the capital gain, then only we increase it for the inflationary value, which is the 8%, but you only increase it for the tax years that have already passed. So that would have been 2018 and 2019 tax years would have been finalized so far. So that's why it's 2 years. And then you add that to the value to get to your adjusted basic amount. Now that basic amount, you then apply the tax table and you work out the tax value as follows. So you take the tax tables which they've provided. Because this is greater than the 550,000, you're on the last item, and then that is how you do the calculation. Now to get to the first provisional payment, you can either divide it by 2 or multiply with 50%. Only 50% will be charged on the first payment. Okay, so that is the step which most students generally miss, is that last one, just divide it by 2. Then for the second provisional tax payment, we know that would happen at the 31st of March. Okay. Our tax is more than 1 million, our estimate, so therefore we will use the estimated amount which was provided in the question. Okay, so the 2020 estimate, and then we apply the tax table similar to the first one. Then the step that you have to remember for the second provisional tax payment is to deduct the first provisional tax payment that you've calculated. Now, if you made a mistake, that's fine. You will receive a method mark for that item to get to your second payment. Okay, so this is how you would calculate it. You can expect to see something like this in your exam. Okay, they have not tested this at all in your test, so anything that was not covered in the test will pop up in the exam. So this is how we do the first and second provisional tax payments. Do you guys have any questions on this? The guys online, do you have any questions?